Hello, this is Jamie Nevers with Colorado Home Realty, your real estate advisor. And today I wanted to talk to you about 20% down, and we're going to debunk that myth. Today I've got my friend Natalie here with me. She's with Genworth Mortgage Insurance, and we're going to talk about how to get into the real estate game by leveraging mortgage insurance and how it's going to benefit you. So welcome, Natalie.
Thanks so much for having me, Jamie. This is so fun. No one ever wants to talk to the mortgage insurance side. So
Well, I think that it's something that people don't really understand. So I really appreciate you taking the opportunity to help educate people about why it's a good thing. It's not a punishment. It just allows you to be able to get into the market sooner.
yeah, so it's interesting, when I was growing up, my family's actually in real estate. So I never thought the 20% rule, but as I've come into the mortgage industry, I still hear that even from loan officers sometimes. And I think that's my job, 3% down. The difference on that in Colorado is huge with our home buyers market. Home prices are extremely high. So averaging, 500,000 and we're putting 3% down, that's only $15,000. I know it's a big number, so I'm not going to say only, but if you're waiting till you have, if you're waiting till you have 20% down, that's 100 grand. And I don't know about you, but it'll take me a long time to save $100,000 to buy a home. And at that point, the homes will cost $100,000 more, maybe more than that.
Probably more at the rate we're going.
Yeah, exactly. So I love helping home buyers. Mortgage insurance has been around for a very long time. The modern mortgage insurance has been around since the 60s, and we're private companies. So, there's a difference between an FHA, a government loan, versus a private loan, the conventional. The best example I can give is that our mortgage insurance drops off. So I think people forget that. They think, oh, I want to just save the 20% and never pay the mortgage insurance. Well, with our home price appreciations, as things change, how long are you really going to stay in the home? Those are things to think about, that if you're only paying mortgage insurance for 5-7 years, which is the average, that's really not that much money. It's a whole lot less than $100,000.
Mm-hmm. It really is. And the best part about it is, people are really asking you to partner with them in order to get into the home, and you're not going to be their partner forever. So once they get to 78%, it's going to drop off. They don't have to do anything special or call you to ask you to take it off. Once the loan balance hits that, it's just going to fall away.
Exactly.
And then they get to build more equity with their payment. If you want to keep paying the same amount that you're used to, you can chunk that down. On average, if you're paying another $200 a month, it's going to save you, I think it's 7 years off your loan, which is huge. So
Which is
there's a lot
awesome.
of
Yeah.
benefits to it.
Yeah, I think, it's really interesting. People want to just keep waiting to buy homes. Our market is so hot here. And I was a prime example of that. I waited 5 years, even though I'm in the industry. And it was a big regret. I paid, $24,000 a year for somebody else's mortgage for 5 years. That was my down payment.
Mm-hmm.
Totally missed the opportunity on that. So when we're talking $15,000, if you can save that up in a year, year and a half, and get into the housing market, all that money goes towards you. I think people forget sometimes that, okay, well, I paid $2,000, now I pay $2,400 a month, but that money you get back when you sell the house. You're building your wealth, you're building your equity, and that's what we want you to do in mortgage insurance.
Mm-hmm. Yeah, and one thing that you and I had discussed a little bit earlier is, them putting 3% down for first-time home buyers is 15 grand. Average appreciation across the United States is way lower than Denver, so I just ran a 3% number. You would make that money back in the first year, but when we were talking, you were saying that the lowest percentage over the past few years has been 7%. So realistically, 7% appreciation every single year, you're going to get to that 100 grand that you were trying to save in 3 years by putting 3% down. And that's my favorite part about real estate and helping people build wealth is those types of numbers. And really, it's just getting into the market, I feel like, is the hardest part. And I'd like to talk a little bit about what is the cost of this to people. So can you talk a little bit about the difference in FICO, why it's important to work on your credit, and how that puts them in a better position?
Yeah, for sure. I'm glad you brought that up. I know a lot of people use Credit Karma, and that number can be a really big swing from what an actual mortgage FICO is. Those numbers are different. The mortgage sector actually has its own way of valuing your credit score. From the mortgage insurance side, we price every single loan differently, and we price every loan. A big component of that is your credit score, is your FICO. So there's even a really big swing between a 700 FICO that average per month is maybe around $200. Don't quote me, everybody's a little different, but it's around 200 versus if you got your score up to 800, you'd be looking at $95 a month. So you can just imagine for anyone looking to buy a home, that's a $100 swing, $105 swing. That is really, really important when you're looking at a monthly payment. So the sooner you can get into a mortgage professional and figure out what your real score is super important because it may take you 3 months to find a house that you like. And if you don't know your score, then you may need 3 more months to work on it to get it up where you want it to be. So I think starting out there is great.
At least you are investing in your future. You're putting money away and you're helping build wealth. And the cost of that, I mean, is really inexpensive when you break it down on that monthly basis and say, okay, it's going to cost me $100 a month to make 15 grand on my house if it appreciates 3%.
Right. Which is the
That's a,
low end.
that's a great investment.
Yeah. So
Yeah.
I think that's what's so important. The 20%, you have it, that's awesome. Even if you have 10%, it doesn't have to be this 3 or 20%. I think, home buyers should think about how long do they want to stay in the home and how much pocket money do you want to have? Maybe you have 20% down, but you want to do some renovations or you want to buy new furniture when you move into the house. So put 15% down and have a little bit of mortgage insurance, but then you have that extra cash for whatever you want to change in the home too. There's a wide range in there between the 3 and 20 that people can work with.
Yeah, absolutely. It's so great. And, that's why I think it's an added benefit that needs to be talked about so that it's less of a scary thing and less of something that people are trying to, avoid as opposed to taking advantage of it. And, seeing that really our country is allowing them to get into a home, and they're saying, hey, we got your back with companies like you.
Absolutely. I think, it's so interesting. I've got friends in other countries, as we all do. But being in mortgages is super fascinating. I actually had a friend move here from England, and he didn't understand what I did because they don't really have mortgage insurance. He told me that most people have to put 50% down to buy a home. So in other parts of the world, I mean, they're never building their wealth. They're never getting out from underneath because they're constantly building somebody else's by paying their mortgage. So it's super interesting to me that more people are nervous in America to actually go forward with that. You actually have a great opportunity here to start building that early on and for a really small percentage.
Yeah. So awesome. Well, is there
Yeah.
anything else that you want to talk about that you think is pertinent to people that are learning about mortgage insurance today?
I've talked to borrowers that are like, I don't want to pay that. Well, the bottom line is you get into a house so much sooner, you start building your wealth so much sooner. And then although we are here to protect the lender if something were to happen, and that's the whole point, right? You can get in sooner because we're here to protect the lender. But we also have a homeowners assistance group at Genworth. So when forbearances started coming up this year, when COVID was coming in and we weren't really sure what was going to happen with the market, we amped up that group. And those people are there to really help you, to help the borrower to stay in your home. We don't want you to fail. We don't want to pay claims. So we have this group that works with the servicers that hold your mortgage and with the borrowers to say, okay, how can we work this out to keep you in the home, even if it's at a lesser cost, but it keeps you safe and keeps you in your home. So I think people forget about that side of mortgage insurance. We're really not out to get anybody. We want the dream of homeownership to be real, and we're ready to help you do that.
Yeah, it's a true partnership.
Yeah, absolutely.
Okay. Well, mortgage insurance is not a scary thing. It's here as a tool to help us start building wealth through real estate. And if you found this information helpful, please like and share it with your friends. And if you have questions, please feel free to reach out to me. I can put you in contact with Natalie if you have any more specific questions, or drop, your questions in the comments and we'll answer them. But thanks for joining us today. And remember that we help people build wealth through real estate.
Thanks, Jamie. Loved being on.
So much.